Hi there, welcome to kneppyinvests. In this video, what I'm going to do is revisit a video I did in late February 2021. In this video, 5 Villains, February ASX reporting, I featured 5 companies whose share price had taken a hit on the back of them releasing their half-yearly or yearly report. Sometimes when this happens, you see the share price decrease. You'll get some bulls coming out and saying, well, now there's good value to be had and is a perfect time to buy into the company. Sometimes you even hear the analogy, if your favorite shoe is on sale, 40% off from what it was a week ago, you'd have been saying not to buy that shoe, and they try to equate that to a company on the ASX. And I believe it's a very flawed analogy. Because when companies release a half-yearly or yearly report, there is new information in the market, and market participants digest that information and based off that new information, revalue the company. And that's exactly what the market did with these 5 companies. When it comes to the shoe, there's no more information. The shoe is the shoe that it was before, like a week ago. And the only reason it's 40% off is the business or the company just wants to get some more cash coming into the business. So it's a completely flawed analogy. So in this video, what I'm going to do is go through all these 5 companies that I featured in this video and just to see how the company's share price has done since I did that video in February or late February 2021. And you might be surprised about what the share prices have done since then, particularly if you're a bull and you think when a share price decreases by 20-30%, that's a good time to buy into a company. What I'm going to do is show you the initial slide I had in the first video in late February, and which will feature the chart up until that date when the company just released their half-yearly or yearly report. And then in the follow-up slide, I'll show you the updated chart, and we can all see what has happened to the share price subsequent to the original video. So the first company I'll be featuring is Nuix. Now this was a darling on the market just after they IPO'd. So they IPO'd in early December 2020. The share price took off to reaching a high of just shy of $12 in the middle of January. Share price then did pull back, so the market was potentially anticipating some bad news coming. Share price went from $12 to $9. So that's a 33% drop in share price before any bad news had flowed through to the market. Then when they released a half-year report, the share price dropped 32% in one trading day and reached low on that day at $6.06. Now, it was really interesting because I did look at a lot of what the commentators were saying, both amateurs and professionals, in regards to Nuix on this day and then subsequent days. And I could probably say there were half bulls and half bears. There was a lot of very disappointed investors out there who thought this was really bad news and they were selling out. But on the other hand, there were quite a few bulls saying this was a perfect time to buy into Nuix. In fact, there was one comment I did find that said this: anyone who had this on their watch list, today is a golden opportunity to enter at a heavy discount. Wishing I'd waited too. And that just shows you there is a lot of recency bias when it comes to investors. They see the share price dropping from when it was a few weeks ago, and they think the shares are now at a discount. That's not true, particularly if a company has released some new news to the market, and that new news just shows or sort of gives more information to the market, and they can revalue the company. And that's what happened on this situation. So what has happened to Nuix share price since then? Was this a golden opportunity to buy into Nuix at a heavy discount? Here is the updated chart for Nuix, and it's been bad news for those who believed this was a golden opportunity to buy into this company at discounted prices, because the shares have dropped from $6.06 when I did the original video to a current share price at the close of trading on May 7 at $3.59. That's a drop of 41%. In the meantime, or during this period, we have actually seen one dead cat bounce, and that was about 7 trading days after they released their half-year report. The share price rose 18% in one day. And that would have fooled in or caught quite a few of amateur investors or traders. They see the share price go up 18% in one day and think that's a good time to buy, but that's just a dead cat bounce. And you know it's a dead cat bounce because there was not high volume on that day. And they also released their some sort of trading update. When was that? The middle of April, and the share price at that point was $5.07. It was a negative trading update, and we've seen the share price take a hit from that. So again, the share price of Nuix is in a well-defined downtrend. We keep hearing bad news from the company, and share price keeps dropping. So if you do like this company, think they have long-term potential, just be patient. Just wait for this downtrend to finish. Wait for the shares to consolidate, or wait for some good financial news being released from the company. Up until then, we just don't know how much further this share price has to fall. The market cap is still $1.2 billion. So just keep patient. That's the really best sort of advice I can give you, even though I'm not allowed to give you advice. On to CleanSpace Respirators. So again, another company that IPO'd towards the end of 2020. We saw a massive amount of IPOs towards the latter period of last year. And CleanSpace and Nuix were two of those companies. Share price from where they IPO'd to the negative reporting in late February was actually going sideways, but we had two big down days, and that was a real telltale sell signal, in my opinion, particularly with the sentiment that management had in their report, especially in regards to uncertainty remains, and the pandemic has shifted to a closing phase, and they expected second half numbers to be lower than first half numbers. So that was very negative sentiment from management, and the share price action reflected that negative sentiment. So again, this was not a time to buy into CleanSpace because of those reasons and because of the market reaction. In my opinion, the market is smarter, the overall market is smarter than I am, so I should be listening to what the market has to say, because you can learn a lot about the sentiment of the market. And the sentiment of the market does drive the share price up or down. In this case, the sentiment in regards to CleanSpace was quite negative at this point in time. And I really expect the share price to take a bit of a tumble from here. So did it? Well, let's have a look. Here is the updated chart for CleanSpace Respirators. And one word comes to mind when I look at this chart, and it is ugly, absolutely ugly. Shares have gone from $5.80 when I did the original value to a current share price of $1.84. In the meantime, a couple of interesting things. A few weeks or few days up, about 2 weeks after they released the half yearly, we did see a little bit of a bounce in the share price. So it went up 9% over about 3 or 4 trading days. Again, that was a dead cat bounce. That wasn't a shift in momentum or shift in sentiment. Then we saw the actually share price decrease 50% because of bad news released to the market, a trading update, and shares went all the way down to $2, so down 50%. Now, I am a risk-taking sort of investor, so I do like to take risk when I see there could be good value. So I decided to take a position in CleanSpace, and we have seen the share price consolidate around $2 or just shy of $2. I would probably suggest if you are more of a risk-averse sort of investor, probably stay clear of this company until you get a buy signal. And that buy signal more than likely would be good financial news or potentially a shift in sentiment or momentum in the share price. But that shift in sentiment or momentum will take a while to play out. And you can just see that by looking at the moving averages. What you want to see is a share price to be above the moving average, all three of them here. So these are the 50, 20 and 10-day moving averages. And right now, the 50-day moving averages is still above $3. So still a long time to play out for CleanSpace before there's a shift in sentiment and momentum. But I think right now there could be good value here, but there is still a lot of risk at play with this company. So I'd probably recommend, even though I can't advise or even recommend, I would recommend if you are a risk averse, stay well away from this company at this point in time. The third company I want to show you is ServiceStream. This was a company that does have contracts with the NBN, and we were seeing the share price go up to about $2.40. So a nice little uptrend there. And then during, I think it was the middle of December, they did release an announcement in regards to contracts with NBN, and the market didn't like that announcement at all. I do remember reading the announcement and not really seeing any negativity in there. But again, the market is smarter than I am, and I want to read what the market is saying or suggesting. And when I see the share price decrease like it did when they released this announcement, that suggests to me there was something bad in that announcement, and that was the time to get out. So that was a sell signal on that day when the share price was between $2.10 and $2.40. If you're lucky enough to sell on that day, you would have done a good job, because the next day the share price dropped even further to about $1.80, and the share price has dropped ever since then. In fact, when they released their half-yearly or yearly report, the share price went from $1.70 all the way down to $1.15 in 2 trading days on a significant volume. That's the other thing. Just look at the volume when they released that announcement in December. Massive volume again. There was a fund manager or someone out there who did not like what they had to say in that announcement, and just listen to what they're saying, what the fund manager is thinking, because they are smarter collectively than you are. And then when they released their report, their financial report, massive volume on those 2 days. So again, 2 more sell signals for you. So just a slew of sell signals over about a 3-month period for ServiceStream, and the share price dropped from $2.40 to $1.15 in that time period. So what has the share price done since then? Well, let's have a look. Here is the updated chart for ServiceStream. Before that sell signal in middle of December, the shares were in a nice uptrend, good time to buy at that point in time. And as soon as you had that sell signal, that's the time to get out, because that sell signal in the middle of December, around that announcement with regards to the NBN contract, that shifted the sentiment and changed the momentum in the share price. So it went from a nice, well-defined uptrend to the beginning of a downtrend. And that downtrend has continued to now, and it really looks like it will continue for the foreseeable future, in my opinion. So what has happened to the share price since I did that previous video? Well, it's fallen from $1.15 to 98 cents. And that $1.15 was off the back of the share price falling in 2 consecutive days from $1.70. So it has fallen another 15% since then. There was a little bit of a rebound in the share price in middle of March. We did see the shares go up 12%. In fact, the shares went up to, I think it was $1.25. So in fact, from that bounce, or the top of that bounce, the shares have fallen another 25%. So that bounce was not a time to get in. It was not a change in the sentiment. And you can see it was not a change in sentiment just by looking at the moving averages. That's all you have to see in this sort of situation. NRW Holdings is another case where it's not really a company I've been following all that closely. And when they released a half-yearly or yearly report, I'm not even sure what it was, we did see the share price drop off a fair bit. In fact, 28% it fell in 7 trading days from the release of their report. And the first day, or the day they released the report, there was significant volume. And that was a definite sell signal, because you can see the share price move considerably lower on significant volume, and the potential uptrend, or the uptrend that we did see develop, or it was in, had broken. So whenever you see that sell signal, in my opinion, that's the time to get out. You don't have to think, well, maybe it's going to go high, maybe it's going to bounce from that point in time. Just sell, because there is a potential that the shares will keep on dropping. So have the shares in NRW Holdings kept on falling from the share price of $2.01 when I did the video? Well, let's have a look, and I think you know the answer to this question. And here it is, the updated chart for NRW Holdings. And the release of their half-yearly or yearly report in February was the catalyst for the re-rating in the share price. It was the beginning of the new downtrend. You probably could argue it was actually a few days before they released their announcement. We did see the share price come off, pull back from a high of $3.20 to about $2.60. And we actually saw those moving averages starting to shift around. So the share price, instead of being above the moving averages, it was falling below it. So that could have been the first sign of a shift in sentiment and a shift in momentum of this company's share price. So the shares have fallen from $2.01 to $1.74. So not a big decrease in share price, but still a 13% drop. Now, in the meantime, during this period, we have seen the share price rally on occasion, just like every other company. So there was a period of time where the share price rose 8%. And I think a lot of amateurs will be fooled by this little rally in the share price, thinking this is the shift in the sentiment, shift in the momentum, and they will buy into that. But when you look at the volume during that period, there was not significant volume. So that was, again, a little bit of a dead cat bounce, because probably the shares were oversold, and some of those traders saw the shares oversold and thought they'd make a little bit of a profit by buying in that point in time. We actually have seen the share price of NRW Holdings fall from $2 to $1.75 in the past few weeks. So still a lot of negative sentiment in regards to this company. And if you do like this company, the only recommendations I'd have to say right now is just wait, be patient. Patience is the most important thing you can have as an investor. The final company we'll look at is Kogan.com, one of my favorite companies on the ASX. And I actually do think this company has a bright future simply because of the space they're in. And most of the companies in this space could be significantly higher share price in the future. But you never know. That's not a given. In fact, we've seen a lot of times in the past where a sector looks like it will become huge, and it does become huge, but players within that sector don't become huge. For instance, automobiles. So if you go back to the start of the 20th century, it was fairly obvious that automobiles will become fairly huge. Well, maybe it's not obvious, but you could have bought many automobile companies at that point in time. There was a plethora, but most of them vanished. Most of them did not survive. Only a few did. And even those few who did weren't really financial successes. So just because a sector booms doesn't mean any participants within that sector will become successful. So that's something to keep in the back of your mind. So Kogan.com, I do like trading this company, and I actually did buy into Kogan sort of late November, early December, because it looked like the share price was developing into a nice little uptrend, and that uptrend failed on the 29th of January when they released a business update to the market. You can see a massive down day. There was actually two massive down days, and that was the time to sell. So that uptrend failed, and whenever uptrend fails, you sell out. So was it a good decision at that point in time? Well, after that, actually the share price did keep on falling until they released their half yearly, and the share price at the time they released the half yearly was $13.98. Was that a good time to buy in? Was that good value? Well, let's have a look at what the share price has done since then. Here is the updated chart for Kogan. Just like every other company I have looked at in this video, we've just seen a continuation of a downtrend from where or what we saw in that February video. Kogan is no different. The share price has dropped from $13.98 to a current share price of $10.58. That is a drop, another drop of 24%. And when you look at this chart, there is no sign that the share price has, or the share price drop has stalled or has finished. We did see the share price get to $10 2 weeks ago, and there was a bit of a rally in the share price. In fact, it went from $10 to about $11.75. There was some talk, some jabber that this was the shift in sentiment. The momentum had shifted, and the $10 was the low in the share price. $10 is a very powerful support or resistance level for shares, and if the share price in Kogan does fall below 10 cents, or $10, that would be fairly bearish. But at this point in time, what I'll be looking for, because I am interested in buying back into Kogan, would be just to wait for a period of time when the shares go sideways, because that would tell me that the selling in this company has stopped or has stalled, and I've been waiting for some good news or a breakout in this share price from that consolidation. Up until then, just remain patient. You don't want to buy into a company too soon, like all those people who have said, well, the shares have fallen 10%. For instance, Kogan back in January, 10 cents, has fallen to $20. Great time to buy. They're a little bit cheaper than it was a week ago. And if you bought in at $20 in January, your value of your Kogan shares has halved since then. That is all I've got for this video of 5 villains from February ASX reporting revisited. Hope you've enjoyed this video. Hope maybe even learned something. I've really enjoyed giving this video. So if you do have any comments or any questions, make sure you leave in the comments section, and I'll answer anything you have to say as soon as possible. Otherwise, I'm not a financial advisor. So if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. But that's all for this video. Have a good day. Speak to you soon. Bye.